Hello lovely people out there, I'm Kate Hill and welcome to another special monthly city market update, this time Brisbane. Now, as you know, we give you the best, honest and balanced commentary and content on our channel. So before we do anything else, please subscribe to our YouTube channel, hit the notification bell so that you don't miss out on any of our recent posts, our news updates, our suburb analysis reports, our expert hints and tips around buying, owning and investing in property. And as important, please hit that like button too. We really appreciate your support. Now, for those of you who know me already, you can totally skip along here, get to these juicy bits. And for those of you who are new to our channel, welcome. I really am so happy that you found us, and please do keep watching. So to explain what qualifies me to be sitting here talking to you today about property buying and owning and investing, who the heck are you, Kate? Well, I am not an amateur at this. I am a professional in property. In fact, me and my team are professionals at property. We have been in this game for a really long time. We have been advising and helping people. We've seen most things happen, the ups and the downs of property cycles, and most importantly of all, we ourselves own and invest in property. We are out there doing it. So we're also a bit of a rare breed because we are qualified property investment advisors. So we don't get paid by anyone to sell property, and we actually genuinely do care about empowering you to get the best outcomes for yourselves. And we are experts at what we do. We attend auctions, we appraise, analyse and buy property. We are at the property coalface 24/7. So I'm hoping that that's convinced you. You can watch our video here. I've also listed it in the description below for our most recent national house price update. So, Brisbane's property market. At this stage, Brisbane appears to be keeping the coronavirus under control, despite some very small cluster outbreaks from time to time. Things to note are the fact that most of Brisbane's population and Queensland's population has been able to return to work. Local consumer sentiment is quite strong, and they do seem to be able to move around quite freely, with certainly fewer restrictions than Sydney and Melbourne. Now, all of this bodes very well for the property market. Brisbane's property market overall has been very solid throughout our pandemic period and actually rose by 0.5% overall in September. In the September quarter, Brisbane's market held steady with neither a loss nor a gain, and a gain of 3.8% on this time last year. Now, more specifically, CoreLogic figures indicate that prices rose 0.4% for houses and 0.7% for apartments in September. Brisbane's median prices are up 4.5% for houses and 0.7% for apartments in the past year. Now, you can see on these growth charts here that these suburban property markets are holding really well and some are rising. The city's combined vacancy rate is around 2%, and as with Australia's other capital cities, this overall rate really only tells half the story, of course. The inner city is struggling with vacancy rates being really high, as you can see here. However, when you move to the middle and outer suburb ring, the story is quite different. Rental markets have most definitely tightened, with many of those property markets across the greater Brisbane area experiencing the tightest vacancy rates that they have had in many years. Agents are seeing multiple applications from tenants being submitted on properties for rent, and this tells us the very real shortage of quality rental properties available. So you can see in the charts here as well that some vacancy rates are super low, and rental properties are being held really tightly. Now, this is set to get worse for tenants as demand increases, and I'm going to discuss this a little bit further shortly. According to SQM research, listing volumes are still lower in Brisbane than they were 12 months ago. And in the last few months, listing volumes were down anywhere between, say, 5 and 9%. Now, this isn't actually too bad, considering those drops in listings when you compare them with Sydney and Melbourne. But we do expect transaction volumes to remain quite low for some time yet, and really that's mainly due to limited supply. Our buyer warning for Brisbane concerns the inner city and CBD suburbs. The vacancy risk is still really high there, where there are large numbers of higher density units. Rents in the unit market in Brisbane have seen price falls, not as steep as in Melbourne and Sydney, but nevertheless trending downwards. And this is because there are similar factors affecting those property markets, as we have been reporting for quite a while now for Sydney and Melbourne. There have been large increases in the supply of investment apartments over the past few years in Brisbane, with also a significant number of brand new apartments being built and completing. Now you add to that all the short-term Airbnb rentals that have recently transitioned to longer-term rentals due to the restrictions on travel because of COVID-19. And while the supply of these rentals has surged, we have also seen a big decline in the demand for these properties. International and state border closures have weakened apartment demand from short-term travellers, obviously, as well as international students in Brisbane and all international travel, right? The same as around the world, industry sectors such as hospitality, the arts, and recreational services have been hit the hardest by job losses and reduced working hours. Now, typically, these types of workers are more likely to rent inner city apartments, which has also negatively impacted on the demand for these properties in Brisbane. So we issue our warning specifically for property investors for these areas. Be careful if you get tempted by super cheap deals, but do be careful when considering these markets. Now, moving forward, Brisbane is really well placed to benefit from the 4 key trends that we are seeing as impacting the real estate markets across Australia over the next little while. It got the virus under control really early, and apart from the state border closures, life got back to relative normality quite quickly. First home buyers are very, very active in Brisbane, which offers a range of affordable precincts in the metro area. Brisbane and Queensland overall gain more from interstate migration than any other state or territory. And most of that growth goes to Brisbane and southeast Queensland. So the impetus from people moving away from Sydney and Melbourne to more affordable areas with lifestyle options really is likely to boost that Brisbane market. It will have quite the impact on rental vacancy rates moving forward because demand will be boosted from everyone moving to the area and renting before they buy. Now, as I've reported before, many of the major bank economists are now revising their growth forecasts for property, and they are a lot more bullish about the property markets, having originally forecast major declines in value. Westpac, CommBank, AMP Capital, and a lot of others were tipping up to 30% declines in prices back in March. And this absolutely hasn't happened anywhere around Australia at the moment. And the latest price data shows exactly how wrong they were. Now, Westpac state that they now expect many capital city markets to be more resilient, with a national fall of 5% between April and June next year, with a drop in Brisbane specifically of -2%. Of most importance is that they are much more optimistic about the pace of price appreciation over the following 2 years, with a total expected increase of around 15%. Westpac's economist actually expects Brisbane property to surge 20% between 2022 and 2023. And the big coming trend is our infrastructure-led economic recovery. The Brisbane market has been held back in recent years, really, by the absence of major spending on infrastructure. But that is changing as several multi-billion-dollar projects are going to crank up. The federal budget provides further impetus to this. Brisbane will also be boosted by the steady rise in the mining industry over the coming years. In terms of the number of people employed in the resource sector, Brisbane is Queensland's biggest mining town. So with the federal budget designed to generate an infrastructure-led economic recovery, billions of dollars are being spent on transport infrastructure in southeast Queensland. For example, part of those funds will be directed to motorway and other road upgrades on the Gold Coast and in the south of the Brisbane metro area. Around $760 million will be poured into the Gold Coast road upgrades. Most of that will go into the first stage of the $2 billion Coomera connector, allowing construction to begin next year. The $750 million from the federal government matches the $755 million put forward in September by the state government to fund this 16-kilometre first stage of the arterial road between Carrara and the Coomera Marine Precinct. And this is to provide an alternative to the congested M1, which links Brisbane to the Gold Coast. So ultimately, this 6-lane Coomera connector will stretch 45 kilometres from Nerang to Logan City in the south of Brisbane metro area, which is mostly 4 lanes each way already in many of those parts, right? And then most of us who know that road really well know how busy that gets. So it's expected to take up to 60,000 vehicles off the M1 and was fully gazetted by the state government last year. Now, always remember, when it comes to property, that different areas are going to do different things. They are going to perform differently at different times for different reasons. So, as always, we will keep you updated on all the comings and goings of the Brisbane and Queensland property markets. Please don't forget to just quickly subscribe to our channel, hit that like button, leave me a comment, let me know what you'd like content on. I really do appreciate your support, and I will see you again really soon. Bye.